Hi guys, welcome back to All Things Wholesome. This is a channel where we discuss all things that teaches about money sustainability. Today I'll be talking about a credit score. I'll be defining what credit score is and how it can help you. From my previous videos where I talk about credit, I've explained how lenders use credit as their asset. So in simple terms, it is their business. Therefore, how can they minimize the risk of their business? So they use something called a credit score. So now the question is, what is a credit score? Firstly, before the lenders can lend you their money, they need to know what type of a customer you are. Therefore, they need to know your credit payment history. They need to know the total debts that you have. They need to know the types of credits that you have. They need to know a recent or a new inquired debt that you have recently made. And they have to know the period of your credit history. All these factors that I've just mentioned will help them understand and know what type of a borrower you are. They then developed a numerical analysis system that is used to rate you as an individual. This system helps them to determine your credit worthiness as an individual. This number gives an indication to the lenders whether you are a good or a bad borrower or customer to their business. These numbers ranges from 0 to 999. So 0 meaning that you have no credit or they cannot retrieve your credit history. Anything less than 609 is regarded as poor credit score. From 610 to 649 is regarded as a fair credit score. 650 to 699 is regarded as a good credit score. 700 to 749 is regarded as a very good credit score. And anything above 750 is regarded as an excellent credit score. These scales are slightly different depending on which credit union you use. You're probably wondering, where does these scales come from? There are companies that are allocated by lenders that collect your information relating credit ratings. Therefore, they make this information available to the lenders so that they can check your credit worthiness and decide whether they want to loan you their money or not. So these companies are called credit bureaus. Basically, credit bureaus are companies that collect your credit related information and makes it available to banks or financial institutions that lends money. These are the most common credit bureaus that lenders use. We have Experian, TransUnion, Equifax, XDS, and CompuScan. The main reason why lenders use credit score is simply to minimize their business risk and avoid losing money. Now we come to the reason why your credit score is important. You need to have a good credit score because it helps you qualify for more loans or credit. So this is because lenders are now confident that you are a good customer and you are able to pay back debt, so they will be more than willing to lend you their money because they are confident that they will get it back. Another thing is that you can get certain jobs. So let's say you've been studying finances and you'd one day want to work for a financial institution or a bank. So you need to have a good credit score because they need to trust that you are good with your finances, because they cannot trust you with their finances if your credit score is bad, which means you cannot manage your finances properly, so they can't trust you with their money. A good credit score can help you get lower interest rates, meaning that you get to pay less interest to your loans than most people, because now lenders are confident that you are a low risk and you do pay back your loans, unlike people who have a bad credit score meaning that they are not good at paying back, so they are going to charge them more interest. And also, if you're a person like myself who doesn't stay at home, who also doesn't own a home, a good credit score can help you get approved easily for rental properties. And also, if your job requires you to have a car, if you don't have cash for that, you can easily get approved for a vehicle finance. And if you're a person who owns a home and who owns a car and you need insurance, a good credit score can help you get lower insurance rates, because the insurance company understand that you will not default on your payments, so therefore they trust that you are going to pay your premiums in time. Lastly, when you have a good credit score, you get to have negotiating power. This is because lenders are now satisfied with your credit history. They understand that you are a paying customer, so most of them are even going to be offering you more credit with a lot of benefits, and that just gives you the power to choose the best option for yourself. Thank you for allowing me in your space and lending me your ear. Always remember that financial education is the key to unlock money skills that helps maximize your opportunities and create wealth for yourself. Don't forget to subscribe and like the video if you enjoyed the content. I love you. Have a lovely, productive day. Bye. Peace.